What an incredible week in the markets. This is the weekend edition. My name's Des Woodruff here at Grok Trade, and this video is good through Sunday, April 24th, 2011, putting us right at Easter. And I want to talk to you about a number of things. Hold on tight because we're going to be moving very fast here. We had a big push due to strong blue chip earnings. Set stocks higher on Thursday and Friday, including Apple and GE. However, McDonald's is warning of higher food inflation. Crude oil is around $108 a barrel. Gold now over $1,500 an ounce. We had jobless claims fall on Thursday, however, remaining above 400,000, and we had some bullish economic news when it comes to the housing starts this week. Well, let's get going here. I want to talk to you about some charts. First, I want to have us look at the VIX Volatility Index. Volatility Index here is the volatility index that's held at the Chicago Board of Exchange. It just measures the volatility based off of options, and it's a lot of people consider this the fear indicator. The higher it goes, the more fear. The lower it goes, the less fear. We are right now at roughly a 4-year, not quite, but almost a 4-year low at this moment in the markets. If I were to bring up a monthly chart, look at this monthly chart. Look at this right here, come all the way across. Puts us in June of 2007. However, this could keep going lower, but this is very, very oversold right now. We're at some extreme lows, and the volatility index is giving us a great implied volatility reading, meaning that the premiums for you option traders out there, the premiums are quite juicy. And I'll just let you know that I happen to have VIX calls going right now because I think that there's a good chance of some upside potential taking place sometime in the future. So I'm actually looking at July calls. And let's get going here on the big markets. Here it is. This is the S&P daily. And we had a nice push through a trend line, not too shabby. We have the shadow line that can still act as resistance right here, putting us around 1338. And then we have a major area right here around 1340. A lot of us traders are watching 1340 to find out if we can get above that and stay above it. We also have a trend line that would be interacting or intersecting about the same area. Very important to watch for. We're starting to go positive here on the MACD, and we're going positive here on the histogram. The weekly chart on the S&P, not looking too shabby here. We did close for the week over this trend line, but we hesitate right at the shadow line. We already had stopped. Now, on the weekly, we're watching 1343, not 1340. So 1340 and then 1343 on the weekly. Very important to me as a technician. Furthermore, the monthly, other than this high right there, that 1343, not too shabby. But we have what's called a hanging man. This is a hanging man reversal pattern. However, we have 5 more trading days in this month. Chances are we're going to end up with something that looks similar to a hanging man reversal pattern. So that would be quite ominous. So let's keep our eyes on that. Let's show you the Dow. Dow 30 is making a major charge, blowing out some highs, almost reaching a 3-year high. Now, let me share something with you. Normally, right before market corrections, you will see the Dow doing the best. The Dow will lead the rest of the market, and we're seeing that right now where we're making these new highs. The Russells will actually lag the markets, and we're going to be looking at that here momentarily. But the Dow looks very strong right now. And why does this happen right before a correction? The reason this happens is because of the measurement of risk. perceived risk in the big blue chip 30s is less than those in the smaller capital or small cap uh, stocks, such as in the Russell's 2000, which might be deemed more risky, more volatile. So people want to move their monies out of the more risky stocks, quote unquote, into those that are less risky, quote unquote, into the Dow. And that's a lot of times why you see the Dow lead and the Nasdaq or the Russell's lag right before a market correction. However, we're looking very bullish right now. We're over the histogram. We're positive here. We got a nice run taking place, making higher highs and higher lows. The weekly chart on the Dow looking pretty good, but we do have an area of resistance. You can see this support. Let me bring in a trend. You can see it better here. See that support coming across now, resistance. You see that resistance? Let's go back to a candlestick. We're right at resistance, and look where we're almost there again. So we have this high base, but we have some resistance we have to get over. Some people think that we can get to 13,000. I think it's got a lot of chewing to to get through to make that happen. So we'll be watching that pretty closely there on the weekly. And then when it comes to the monthly, we have higher highs, higher lows. We have some areas of resistance coming up. Watch the 12,628 and then 12,814. Those are two key areas that I'm watching as a technician. And let's take a look here at the NASDAQ. Making new highs, but not the same type of highs that we're making in the Dow. We have a resistance area coming. We have a dragonfly doji at the high, so it's a reversal pattern if we make a new low. So I don't like that as a bull. But the area that I'm watching for here is 2834 on the daily. When it comes to the weekly chart on the NASDAQ, we did break through this trend line. Very nice. We have 2834 as a resistance point. That could be a sticking point for the markets here. We'll be watching that. And let's also look at the monthly. The monthly also gives us a hanging man pattern. However, we have 5 more days of the month, so anything can happen. But we have resistance at 2861. So make sure you write that number down, 2861. Now, keep your eyes open on this. I'm going to show you the Russells. The Russells isn't anywhere near making new highs. It's lagging. That is a lagging chart. We're barely over the zero line, but we're trying to chew above it. We have major resistance at 853 or 854. Be watching that like a hawk. Let me show you the weekly. You're not going to like this if you're bullish. Rising wedge, bearish divergence on the CCI oscillator, rising wedge, that's no good. We have major resistance popping up here around 854, and then we have a shadow line up around 870, and then a major trend line up higher around 887, 888. So we have some resistance here. If we start to break down below this trend line and a shadow line, which I don't have there yet, if we break down below that, we're in major trouble. It'd be interesting to see how April handles itself. Let me show you the monthly. You're not going to like this either if you're a bull. Remember this trend line that we have drawn? What we have is support. We copied that through it right here on that high. Look at this. Resistance again. Now we have a doji. Look at this. We closed lower than this 847, that mark that we've been watching. We closed right under that. It tried to get over it. It touched the trend line. We came right back down, closing below a major area of resistance. Ouch. Now, let me show you something when it comes to sector rotation that I think you'll find very interesting here. Okay, I'll bring this over and show you here. First, this is the website 101s. You can go here and watch those. Those are free to you. But go to FinViz, pretty cool site. And inside FinViz here, what you want to do is click on, let me shrink this again, click on groups, and this is ominous here. Look at financials at the very bottom. The markets are only as strong as the financials. For the week, it is at the very bottom. Basic materials is usually top heavy, meaning that when you get basic materials and energy going higher, then that usually happens right before a market correction. So we have basic materials higher, we have energy creeping higher for as far as crude oil is concerned, and solar for 1 month. Financials at the bottom. Ouch! Watch that. 3 months financials at the bottom. That's no good, gang. 6 months financials near the bottom. Also, utilities. Watch for utilities getting stronger. And we have, let's go to 1 month here. Utilities is right in the middle. So, and we're down in the lower part of utilities. If utilities creeps up in the next month or so, that's a telltale sign the markets could be in dire trouble. So you're hearing it from me. I'm way early here, but as a technician, I like to foreshadow, and I'm giving you that warning. Stay bullish until the markets do correct. You don't want to try to guess or pick a top. Let the amateurs do that. We need to not think like amateurs anymore and start thinking like professionals and trading the way we know to trade. Now, I'm going to give you, because this is a long weekend and it's Easter weekend, I'm going to give you a couple discounts here, and I highly recommend that you take advantage of it, because after this weekend, they are gone. You have this weekend and that's it. And here are the discounts. Go to Trading Education. You can watch the one-on-ones like I said, but go to Trading Education, come down, you're going to see one-on-one courses you can watch now, but go to the 2-on-1 courses, very advanced, 6 hours, there's 5 courses, there's 28 lessons, very, very deep, very advanced, and it is the secrets of secrets when it comes to trading, and this goes right now for right at 700 bones, or $697. I'm going to knock off $125. All you have to do is type in the promo code Grok 125, and that's capitalization. It's capital GROK 125. That will knock off $125 on that. And for the V newsletter, in the V newsletter, let me show this to you. If you go back to home, the V newsletter, go here. I'm going to give you 2 weeks free. 2 weeks free. All you have to do is click on monthly here and click in the number 2 weeks, and that's capitalization, capital WEEKS, and that will give you 2 weeks free. Take care. Safe trading. Happy Easter to each and every one of you, and please pass this on to a friend, and if you'd be so kind, give me a thumbs up down there below.